Hello, everybody. This is Brandon. Today is July 28th, 2024. It's about 8 minutes before 3 p.m. Eastern Time. And what a week we had. And we've been warning about the divergences. And last week I said, hey, the stock market correction has started and get ready. And a lot of you have done well. And congratulations on that. Now, we're going to be talking about, so what now? Now that the market crash is starting, how do we trade this week from July 29th to August 2nd? And that's the topic for today. And it will surprise you what I think. Okay, here's the disclaimer. Pause it, read it. If you agree, please move forward. And of course, my shameless plug on x.com/Galaxydoc Market. And follow us here for any intraday commentaries or breaking news or anything that I might want to cover that, I can't do with my weekly and bi-weekly YouTube videos. Okay, unless you belong to our membership, obviously. Now, last week, just to reiterate, we talked about market correction is here, and that was based on the critical break of SPY 550.73 support level. They tried to reclaim it and they failed, and boy, did they ever fail. Here's the thing though. Markets do not go down in a straight line, however. Okay, what do I mean by that? That's what we're going to be talking about. But before we go through all the technical analysis and charts, I know a lot of you like to just kind of drop off because you think I talk too much, but it is something that is important, and I put my heart and soul into this. So I hope that you guys watch this video all the way through. All right, so here's my news segments, right? Israel's saying, hey, an all-out war is going to break out. Hezbollah again. The world's not in a safe place right now. Rocket slams into the soccer field as the Olympics to foster in peace. I don't know. I don't know. I don't know what to think about it. But this is what's happening, okay? Remember, look at what they do, not what they say, okay? Now, economic-wise, we talked about consumer demand destruction and how transports and shipping activity is very, very important. Here's another news that FedEx is cutting daytime domestic flight activity by, it's not even 10%, it's not 20%, it's 60%, right? And that 60% is significant, okay? And, what does that tell you about the state of the economy? We are rolling into not only consumer demand destruction, but I've been talking a lot about potentially that we have already started on the recession. Okay, this is recessionary, what's happening. Okay, so another 134-year-old American furniture chain, which is the Cons, and I'm aware of them. A lot of you are, and they are filing for bankruptcy, okay? It's not conducive when these iconic, long-time heritage-driven companies start filing for bankruptcy. We are headed for a very, very bad recession, okay? And this is all the warning signs that you may be basically getting distracted from with our current domestic presidential campaign situations. And that is a topic for itself. This is not a channel to discuss that, or the Olympics, or whatever else that may be going on. Of course, then Trump tells Netanyahu if he doesn't get elected, a third world war is likely if he loses in November. Regardless, I think you can kind of see the writing on the wall, right? Rising inflation, unemployment, just a lot of chaos everywhere in the world, okay? And this is what's happening. Now, bank failures are almost certain to follow, and this is from Friday, July 26th. The CRE crisis has gone nowhere since 2008, right? And that CRE, which is commercial real estate, and I've been warning you about this, and if you haven't seen my bank failure video that I've done, I know there wasn't a lot of views on that, surprisingly, but you might want to go watch that video, partly because I'm outlining some of the banks that I think are certain to lead the charge there. And we already saw what happened with Comerica, my biggest number one domestic regional bank that may lead the way. And then, of course, Deutsche Bank just came out, also warned about same. Okay, so be careful. Okay, the banks are not solvent. They are being propped up by central banks. Okay. Let's go into sector analysis real quick. And I'm not going to spend too much time because a lot of you have talked about how that segment was the most boring. But I am going to tell you that SPY and consumer discretionary and the techs continue to lag right now, along with communication services, right? Especially the internet stocks. The rest of the stocks, however, started to show on Thursday and Friday, and I've been warning about that a little bit, that there may be a potential for a counter trend bounce, and they are all breaking above prior breakdown areas, okay? Except for spiders, XLY, and then QQQs for that matter, communication, XLY is consumer discretionary, and the technology sector, okay? I do believe that based on this, especially because all of these have certain gaps, that needs to be filled or partially filled on this leg up, okay, right here. I think it's very, very important to realize that the markets do not go down in a straight line, and for however long it will last. And I think there may be an attempted bounce ahead of what? The FOMC meeting, which is this week on Wednesday, okay, where Powell opens up his foul mouth. And if you believe anything that he says, I do believe that the Fed has lost control, or maybe they're doing all this on purpose, right? All this talk of fighting inflation, I don't think they're interested in that. If they were, then they would allow free markets to work, but we don't really have that. Markets are basically managed, and so we got to learn how to trade within those parameters, okay? I think the bearish rotations are continuing in tech and communication sector services, and but I think that this week there will be a bounce. So like I said, just a little repetitive thing. So let's jump right into our technical analysis, shall we? All right, so let's start with our McClellan Summation Index, and this is broken, folks. It's completely inverted, and that is because the lack of breath that has led up to the summer melt up, and now we are in the corrective / starting into our crash cycle, and it's getting even more dislocated. And these distortions are showing up in otherwise a market neutral indicators like my McClellan Summation Index. So now McClellan Summation Index, I thought it was going to start pointing down, and it has gone higher. It's showing a bullish quote unquote divergence. And then, like I said, this has been going on since the summer melt up, and we have not seen something like this since 2008. Okay, so I think the crash that will be ongoing, while it does not go down in a straight line, I think the market top is in, and I think we are going to be continuing to be in the sell the rip environment. Now, we continue to show bullish divergences, and for all intents and purposes, everything looks like it is heading that way. But the MACD on the histogram is diverging negatively, and but otherwise the signal is higher, and this leads credence that if this continues to stay broken, it will continue to show a divergence from the marketplace. However, I think this week, at least for a good part of the week, especially leading into the FOMC, I do believe that we're going to have a pretty decent sized counter trend bounce, for which you can take advantage if you're patient and know your pivot levels and know your buy and sell imbalances in the zones. That's what you're going to do to start making profits. Markets do not go down in a straight line, and this is clearly an example of that. Okay, so let's go into our put to call ratio. And like I said, put to call ratio really, despite the sell off, we're at 0.730, still in a bullish category. We still haven't broken out. And, you look at our RSI from this level, I mean, we're just not making a huge dent. And that it troubles me for the entire market because, I know we're in the election cycle year, and I know it's supposed to be bullish, but remember, if the market has figured out, and if the Democrats basically throw in the towel, there's just not a lot of great candidates. I mean, even if I was going to vote Democrat, I mean, there's just not anybody there that I would vote for. Okay. It's not like, and so if that's the case, I could continue to see market volatility expanding into into the presidential election cycle, if you still believe in that kind of stuff. And that's another topic for another day. But I can say that if Trump does get elected, I could see the market just cratering, getting back to its core fundamentals, and everything being blamed on Trump going forward. And so just keep a note of that. But the way we are right now, the put to call ratio, I mean, we're not even above 1.0. Okay, we're not even above this level right here. And so BSMA, a lot of people think this is just a blip in the stock market and everything's going to go to all-time highs. And while they may be true, but right now, technically, we have topped. The correction has started. It does not go down in a straight line. The art of trading on the bearish side during a market crash and correction is to understand that the markets do not go down in a straight line. You have to be able to game these rips and then short those rips. Okay, and I think that opportunity is coming. And for those of you that missed out on the last 2 weeks, fantastic. Opportunities, your opportunity will come. The warning obviously is for those of you that are looking to dip buy, okay, you're going to be dip buying all the way down. Remember, do not catch a falling knife. Okay. Now, let's look at equally weighted versus non-weighted SPX. Remember, this is what clued us into the market top. And if you look at the equally weighted, which is at the top, okay, is actually showing some form of a bullish divergence right here, right? I mean, you're seeing some bullishness right here. We're seeing a little bit of a rebound, whereas in the standard, right, non-weighted, we're going down. Okay, so now again there is that divergence. The equally weighted is going higher because there's people that are beginning to nibble on these other non-Magnificent Seven stocks in the SPX, and so that's what's happening, I believe. Okay, and this will continue. And as the Magnificent Seven sells off, and there has to be an equilibrium somewhere down the road, but we're going to see something like this type of a divergence. While this is moving higher, we're going to be coming down. And once that tops out, I think we will know that the bottom of the sell-off is in effect. And I think this is going to be a multi-month sell-off that's coming with rip your face off rallies. Okay, and this is why you're paying attention to my channel, right? And I appreciate everybody for all the views that I've gotten, and I really and comments too. I'm finally getting some, which is awesome. Keep it coming. Okay. All right. Let's talk about oil though. Okay. And like I said, oil is the barometer for the economy. And I said if we're headed into recession, and I've been kind of commenting about that, we would expect this oil to continue downward, right? I mean, we're in a downward trend. We just broken through, almost near this rising trend. It's kind of in a triangle, right? I think if the economy continues to crater, you got to watch this oil. Oil going lower is bearish for the stock markets. Oil going higher is bullish for the stock market, okay? Now, let's look at gold, because gold started breaking out higher. And we talked about last time how gold was preparing itself to break out from these areas all the way down, right? And we found our support. We finally got some footing here. And gold is looking to break out even higher as long as we can get above this 80 MA. Okay, now this chart is off from the GC, which is a gold futures chart. This is just a continuous contract, CME contract, and it's not showing full things. But for example, what I mean by that is gold, the way it ended at the end of the week, here's gold right here, and I'm just bringing this up. Okay. Notice that gap up, and we're at 24.32. Okay, we were at 23.82, and I think it's just a little bit lagging on the stock charts. Okay, gold is breaking out. Gold is telling you there's volatility headed our way. Moving quickly along, the TNX, the 10-year Treasury also is lagging right now, right? The Fed wants to keep this thing below 42.50, and we finished the day around 42. So there is a battle. There is that attempted rescue, and this is why I give credence that based on our technical analysis, I think we're going to get a pretty sharp counter trend bounce heading into FOMC. And if by any weird chance that the Fed cuts rates for some reason, which I doubt that they will, but if they do, look out. you're going to get a pop in the market, and then markets are going to realize, well, why are they cutting in, ahead of this inflation? The 10-year Treasury is just going to go wild, and the inflationary pressures are just going to mount. And be careful what you wish for. But right now, the 10-year Treasury yield is just chopping around at this, S1 level, which is our pivot. And basically, it's just jumping up and down. It hasn't broken out or broken in. And that is because the Fed cannot afford for this TNX to be below 42.50. Write that down, folks. Okay, let's move on to US dollar. The US dollar also is attempting to move higher. Remember, higher US dollar, I think we bottomed here. If we start moving higher, that is a super negative for the markets, okay? Now, let's look at our four of the main magnificent sevens, and I usually have been following the NVIDIA, which is down here. NVIDIA is basically top. We had the double top right here. We're coming down. I think we're moving further down. Doesn't mean we're not going to try to bounce earlier in the week, and you got to game that, okay? It's got so much room to come down. I mean, I think the fair level is coming all the way down to here, but that's not going to happen overnight. Let's look at what's going on with Tesla. Tesla was taken out to the woodshed and shot at this point. A lot of people are wondering if this is the bottom. I think we could try to rebound, and then you got to game that. And towards the end of the week, maybe after FOMC, I think we'll start resuming downwards, okay? Apple reports earnings this week, and I believe we're going to continue to move down. And so what is it there? Okay, what's happening here? When you compare this with Dow Industrials and Trannies, okay, they've all basically kind of sort of responded higher, right? That is foretelling us that perhaps a pretty strong counter trend bounce is in the making. Now, they've tried to bounce on Thursday and Friday, and it just, just kind of chopping around. Definitely trying to find a bottom for now. And I do believe that may come as early as Monday. Okay, just watch for that bounce. It doesn't mean we're bullish. Okay, but the markets do not go down in a straight line, and this is telling you that. Okay, right here. Look at our industrials and trannies. Trannies are breaking out, even though you look at things like UPS, which we had a fantastic trades on, and FedEx warning about cutting their deliveries by 60%. These are finding bottoms right now. These usually are market leading indicators. Okay, let's go to SPY, because everybody wants to know what the hell's going on with SPY. And this is what I'm talking about. SPY is trying to find the bottom. And the bottom is that I believe it's gotten into this gap area. We did not fill the gap. I believe we're going to try to bounce back above into this 552, perhaps all the way up into this 556 level. Maybe it happens with the FOMC announcement. Maybe they get bullish. Maybe they cut rates. I have no idea. I just know that it's been basically running into resistance right at the 5 SMA. I believe that we have a little bit higher to move up on, and that counter trend bounce is what you want to game, especially if you've been with your mouth open, too scared to jump in because everyone told you that it's going to infinity and beyond. We are going to bounce, folks, and that is more evidential here. When we look down here, we tended to break down above this downtrend line on the RSI. All right, MACD. We're beginning to flatten out a little bit. I mean, nothing really serious. We need this to cross back higher. I do believe, though, on the CCI that we're beginning to break above, and it's maybe get back into that zero level, which should be enough to get the SPY to about 550 to at least 552 level. Okay, so keep an eye on this. Now, the other thing is, if you look at what's going on with my stochastics are basically, forming, it's still directional. I do believe that they're going to form this bullish cross shortly. On the PPO ADX, still early. I mean, it's directional to the downside, but I do believe we're going to start forming some of these just early on and come back down. The ATR has expanded near the top, so once it starts to break down this way, that's when we're going to have the temporary trend change, I believe. Okay, this is SPY for the daily. Let's look at the weekly. Look, okay, I don't care how you slice it or dice it. Maybe we get a little, stalling action for a week or two. We're going to head into these targets. Write these down, pause it, and look at all these levels that it's headed to. I think that until we hit on to about 468.7, I think that may be the target, and then we probably run into another counter trend bounce that's going to make lower highs on the weekly. So pay attention. This move just got started. I think more likelihood is that we move down into this 535 area from this trend line and then come into this 20 SMA. Okay, so pay attention. Regardless, I do believe that we're going to have a counter trend bounce that's going to fail. Okay, and that's what you want to short. Let's look at the 130 minute. 130 minute is showing the same thing, right? I mean, basically, we've been on a downward trend, and if this starts to break up higher, that's what's going to happen at this point. We are finding some support right at the 80 MA, which is very important. That's our signal line. I do believe we can just start making move higher and then try to bust out above into here, perhaps trying to fill this gap eventually in a few days. Okay, and back up into like this 560, 558, 552 level. That is an extreme range, obviously. I do believe that it may want to fill this gap and then fail, make a lower high. And, that's welcome news for me. I mean, I'm not in, we can opportunistically trade on the long side as a scalp, but, you're waiting for this pop that's falters out. Okay, markets do not change direction very, very rapidly unless the Fed is printing a ton of money again and is going to rig the markets higher. QQQ is the same situation right now. We have basically trend line that is breaking. If the RSI starts to break higher, then it gives us more credence to it moving higher. And then what we got is a situation where we have perhaps found the bottom, and we're just going to move into this orange box and move above the 80 MA into the 20 SMA. That is very, very possible. Markets will not move in a straight line, and I think that we're going to get a counter trend bounce early on this week, maybe this whole week. Who knows? But you got to take advantage of that to build your short positions, or take advantage of it on a short-term basis. I mean, don't go around and buying the dip, significantly. So RSI is definitely coming down on the weekly. I mean, we're coming down here. We haven't entered into this target yet, but perhaps we bounce a little bit in the week, retest into that 480, 490 level, and then break down. And then over the next 2 or 3 weeks, start taking out these levels. Okay, remember, markets do not go down in a straight line. So what we have here on the 130 minutes, though, we do have bullish divergences forming, right? We seem to have bottomed on the 130 minutes, and now we just need to get over this 80 MA into the 20 SMA and back into this confluence. I think it may try to at least get into somewhere into this gap if I'm correct, and that is where you may be wanting to look for a shorter entry. If you haven't shorted, okay, and then you're freaking out because you think you missed a boat. You did not miss the boat. However, there's divergences everywhere that leads credence to my assertion that we're going to possibly bounce early on this week, maybe this whole week. Okay, CCI is positive here. Okay, positively divergent, and it's gotten a little bit more on the 130 minutes impulsive. The stochastic is moving higher. Look at this, folks. Okay, look at my PPO ADX on the 130 minutes. Okay, it's forming that crush indicator. We're going to get a bounce, folks. Okay, so trade accordingly. Now, having said that, okay, there's probably one or two trades this week that I think is going to be a blockbuster trade. I know there's Amazon, Meta, and the whole Apple, Intel, and all these companies are trading. But for me, I think the one that we need to be paying attention to is Carvana. I think Carvana is going to bounce into the earnings potentially, which means that you could build some earnings play. All right, just a suggestion. I'm not telling you to do anything. Okay, but this is something that I want to look for is on the Carvana. I think Carvana is in that used car market. I know they overpaid during the used car inflation. There's defaults. They do their own in-house financing. The trouble that they have with their debt, it's not gone, folks. All right. Maybe it rears its ugly head. Regardless, this is a pretty bearish formation. I mean, look at this, topped out right there. And does it get a little bit above into this area before breaking down? It possibly will. Okay, the bottom of this gap is at 90. I think there's another set of gaps waiting for it all the way down into the 55 level. If they really have started showing signs of debt problems as well as losing money on the cards that they overpaid on, they're going to have some significant problems. So if we look through, I do believe though, heading into the earnings, it may be bouncing and you short that rip. Okay, I think that's the kind of the game plan that we have for Carvana. All right, let's look at the weekly. The daily looks pretty bullish, but then weekly is like tale of two cities. Okay, we continue to have negative divergence on the RSI. Just last week, 2 weeks ago, I believe we topped. I think at the very least that it's going to target all the way down below. Once it breaks down this trend line up here, okay, I think that really the breakout is from that 50, and if they have the debt problem, consumer demand destruction is real. People are not buying cars anymore right now. Okay, and so that is something that you want to pay attention to. On the weekly, it's telling you a different story, right? This is how big moves are made. Daily's bullish, but the weekly is telling you, wait a minute here. Our MACD is ready to break down. CCI is negatively divergent and basically losing momentum, right? And so stochastic has crossed over into the bearish side in a very bullish area. I do believe we are near the top on this. Let's look at the PPO ADX, and the PPO ADX in this situation. I mean, if you look at this, it's kind of one of these, right? It's just kind of doing kind of this. We need to kind of roll over. And I think that basically comes with the earnings, okay? Tesla, my favorite market indicator, kind of partially filled the gap. I believe that we may try to bounce and retest into this 80 MA and then start coming back down. Tesla has yet begun to move. With EVs just getting cratered. You need to just basically understand that we have to basically watch this because the EV demands are declining, and I think Tesla's full of hot air. Palantir, my favorite one. Okay, I said, hey, look, last week we're gonna pull back. I said I was bearish for now, and I said, from this breakout area, we broke down below, got almost near the bottom end of the Bollinger Band, and we need to get over these confluences. I'm bullish for this week. I know, bullish, bearish. Well, you know what? If you're actively trading Palantir, a long-term bullish, I think we're moving higher on Palantir. Probably, maybe retesting into that 29 area. Maybe we get over 30 and stay above there. We'll see. But I'm bullish on Palantir. Okay. Now, let's look at First Solar. That's the other earnings that I'm bearish on this. Okay. And they've been just taken out to the woodshed over the last few weeks. And yeah, it's going to probably, along with the market bounce, come right back into this pivot. And that's where you short it. And First Solar is reporting earnings, folks. And so that's what I have. I'm not going to get into too much detail. I might do a full dive on First Solar before they report earnings, if I have time. I think First Solar reports on, when do they report? Hold on one second. Yeah, First Solar reports after the close on Tuesday, so I may have time to do a deep dive into this, maybe. So I'm just going to keep it here. On the weekly, it's showing you negative divergence, okay? First Solar will hit an all-time high about 3 or 4 weeks ago. We wrote this thing down. We caught this from here to here in a few days, okay? That was a significant trade, and I think we're going to continue to move down after the earnings. First Solar is, if Trump is going to win the presidential race, we're going way below 100, folks. Okay, that's all that needs to be said about that situation. So let's recap the earnings real quick. Okay, I've already told you, McDonald's consumer demand destruction. People don't even have money to buy fast food, especially if the fast food costs more than some of the food that you would eat at a sit down. F5, pay attention to this one. This one's a troubled company right here. I'm super interested in AMD and Microsoft. Bearish on them. You know about my First Solar, right? Boeing, they can't seem to be doing anything right. The problem with Boeing is that they're so beaten down. I would probably avoid them. My guess is that they bounce after earnings. Humana, look, there's turmoil in insurance companies. Cigna, Humana, United Healthcare, Blue Cross Blue Shield. All right, they got into this ill-fated value-based care, and just like they don't know their head from their ass. Humana's a short, folks. Meta, internet sector rotation out of communication service stocks. ARM, it's part of that entire AI space along with NVIDIA. Any pops, okay, and actually into earnings. That's something that I may be interested in front running. Qualcomm, not as exciting as ARM, but I had to throw in there. Carvana, folks, Carvana, consumer demand destruction. Wayfair, consumer demand destruction. Okay, I don't know how this company stays afloat. Amazon and Apple, I'm super bearish on Apple. Apple and Amazon are near the tops, but the one that I like a lot is PKNG and Mercado Libre. Okay, Watch Square and Roku also. Okay, I'm bearish on all of them. Okay, these are all consumer demand destruction plays, and it's something that we need to pay attention to. All right. So let's move on into the next sectors. So here's the keys to next week in summary, right? Markets will not go down in a straight line, which means that we're going to have a counter trend bounce. We went through the technicals on that. And even if it doesn't, okay, you have to wait for a bounce to get in. Do not short the whole, okay? We're in that precarious situation. So all eyes are on the Fed, FOMC, okay, if you believe them, okay? I think they're doing this on purpose, honestly. I don't think they're interested in maximum employment. And are you kidding me? Inflation below 2.5? I think the inflation, if you look at my old tweets on milk inflation and my videos on that, milk inflation is at about 38.7%. I think it went up by another couple cents over the week, all right? That's inflation, folks, for the real people. Okay, markets have priced in 2 rate cuts, and yet we're still beginning to sell off. Imagine what they're going to do if the Fed actually cuts and then gives you a reason for that. Okay, but based on the PCE numbers that came out, it's awful, folks. I mean, we have inflation like you would not believe. So MSI has been divergent with the general market direction, so we're going to go with that, okay? It is pointing bullish, and even if it does bounce, which I think it will, that is a signal for you to short the ribs, okay? Earnings season is in full season, all right? Carvana with an exclamation point. You know what that means. Meta, ARM, BA, AMD, Microsoft, they're all in red color, right? First Solar, exclamation point. Amazon and Apple, Roku, Square, or Block, BKNG, Melly. These are all consumer demand destruction plays. So much activity this week for earnings, folks. And, but focus on the main things. Most of you will do awesome just focusing on indexes like SPY and QQQ, but wait for that pop. Know your levels. If you don't know how to do that, then join my group, okay? Well, we're expecting continued attempt at counter trend bounce. Like I said, this week, it doesn't mean that sell-off is ended. This is how the mechanics of market crash occurs. Okay, watch gold. If it takes out that 25 and higher, market's going to get more volatile, more impulsive. You got to short the rips. Here's my watch list. Palantir, I'm bullish on that. Apple, Amazon, Williams Sonoma, it's just hitting that all-time high. It's time to short this one. Whirlpool just reported earnings. Their sequential decline from last year, same comp. They're down about 47% in earnings. Okay, it's also part of my consumer demand destruction. And after reporting earnings, it didn't do much of anything. But I do believe it's ready for movement down. IBM's the same thing. Spotify, I think, the subscription deal on Spotify is false, and I think it's going to move lower. Google is already moving down. It's part of the internet stock, so it's Spotify. Tesla. Let it bounce. If it bounces, okay, I think it could bounce all the way to 260. If it does that, 255 to 260, you short the crap out of that. Patience is key. More volatility is ahead. Okay, I believe first half to maybe this entire week will be bullish, depending on what the Fed says. Watch Jerome Powell when he talks. Have you ever noticed this? It's not all the time, but it's something that I picked up. Every time he clears his throat, he's telling you lies. All right. So here's the bottom line. Okay, follow me at Galaxydoc Market. Like us, share us, and thank you for all the comments. And we had a pretty good views last week, over 300. Okay, remember, I just started this channel two months ago, and thank you so much for the subscriptions and the kind comments and the negative comments. It's like, let's work together, right? If you want to join my group or want to learn about working with me, email me at coachbrandon@protonmail.com and schedule a consultation. Okay, I have many different types of subscription levels, but I do have an internet package. You'll get all my market commentaries, alerts, and what I'm looking at, and it's affordable. And find out how. Okay. Anyways, be careful out there. Short the rips. Okay. Don't listen to the market pundits. Okay. Even if it's the rips are gonna sound like look like it's gonna new bull market has started, it is not. This world is a crazy and wild place. Good luck to you. God bless.